Welcome back to another weekly financial, market, and economic update. Wow, it has been one heck of a week with us kicking off last week on Friday. An earthquake here in New Jersey with a magnitude of 4.8, the largest New Jersey has seen since the 1800s. Following that, an eclipse just yesterday on Monday. So there's been a lot of nature updates as well as market updates this week. So the biggest talking points for the markets really have been inflation, and talking about that, inflation is starting to change the landscapes of how companies will report their earnings now that we've wrapped up the first quarter and we're in earnings season. So I'm expecting, and I think financial analysts are also expecting, that companies will start to report better earnings growth, meaning that revenue is going up. Inflation is a revenue driver because if prices are going up, then companies are charging more, which can help generate more revenue if costs are kept under control. That's the biggest thing. Costs really have been a struggle for a lot of companies in terms of earnings and profitability. But with the inflation environment changing a bit and rates are coming down, companies, I feel like, will start to perform a little bit better for their earnings reports as they start to trickle out later this week and over the next month or so. Of course, the biggest drivers to the earnings season are going to be the Magnificent Seven, those big tech stocks that we've talked about plenty, Apple, Google, Microsoft, etc. The other 493 stocks of the S&P, I think will start to finally carry their weight. Not that they haven't been, but the Magnificent Seven have been so tremendous in carrying the numbers every quarter that I feel the rest of the 493 will really support that. Most folks, including myself, thought this year from an earnings perspective would be relatively flat. Maybe we'd see a few percentage of growth. And I think that's really changed. I think companies and the U.S. economy has been very resilient to start off the year. Markets have been tremendous. So again, as the earnings reports come out, I think there's going to be a lot of really, really good data there. So a lot to look forward to. I think the markets will stay relatively healthy over the next week. Again, the biggest drivers of market performance in our investment portfolios over the next month is really going to come from earnings reports. So as long as those numbers look good, which I personally believe they will, time will always tell. I can't predict the future, right? But again, indications show that numbers will look pretty strong and pretty healthy. It's going to be a nice factor for investments and market portfolios. And of course, I have to give my tax plug. Monday is the tax filing deadline. It is our last opportunity to make any retirement plan contributions for 2023. So if you're a procrastinator like me, make sure you've checked your IRA or Roth IRA. Check with your accountant, your tax preparer, your CPA, yourself if you're doing it right. See if you have the ability to still contribute. If you haven't filed your return already, then please definitely check. It's still a wonderful time to put money away. Saving for more for your retirement is never a bad thing. So thank you so much for tuning in this week. And next week, I look forward to catching everyone up on all of the earnings reports and growth coming out for the quarter. Stay safe and enjoy the beautiful day. Talk soon.